Atlantic Council studio here at the IMF's headquarters. It's Friday afternoon, things are slowly winding down, but before they do, we have a very interesting guest that I would like to introduce to talk about an institution that many people don't really know what it's about, the Bank for International Settlements. But let me first welcome Stijn Claessens, who is a former colleague. You just retired, Stijn, from the BIS as the head of financial stability after a long career that took you to the World Bank, to the International Monetary Fund, where we were colleagues for some time, and then also to the Federal Reserve. Stijn, welcome, and thank you for doing that. I would like to ask you, you just left the BIS, and perhaps you could first explain to our viewers, what is the BIS? What is it there for, and what does it do these days?
Well, thanks very much first for having me. It's a pleasure to be here. The Bank for International Settlements, the name already says some of what it does. It was, of course, established more than 90 years ago. It was one of the first, in some sense, international institutions. It's not a formal UN chartered institution as such, but it was meant for the reparation war payments between France and Germany. But it grew into much more than that. So the settlement part is there still in some sense because we have a banking department. When I speak we speak about historical we. And that banking department provides services for the central banks. But what it essentially now ends up doing is really getting together officials both on the central bank side, but also on the supervisory side, to talk about issues. Now you say talk. There's also an action component to it. But let me go to the meetings part of it, which is very high frequency. If you want to read more, there's lots to read on the BS website, of course. The annual reports kind of documents many of these things. But it's really about getting the governors together 6 times a year. So all of them, and when I say all, the 63 central banks that are a member. Russia at the moment is suspended, so they're not able to come. We don't want them. But beyond those, many of those come every 2 months. Mm-hmm. But it's quite high frequency given many other meetings, including the IMF one. And the issues that the governors speak about are the issues of the day. So inflation obviously been the issue recently, and the BS staff, which on the analytical side are based in the Monetary and Economics Department, where I was, prepare background material to highlight the commonality in the issues. It's not about individual countries. The BS does not have an operational responsibilities. Mm-hmm. We're trying to raise the exchange of information and the learning that comes along with that. And the meetings are, in some sense, fed by those documents. We produce those in the MED department. And then there are a lot of so-called committees. Committees meaning not like an ad hoc thing, but really standing long-term committees that can go back almost to the beginning of the BS. Some of them are involved in data collection, which was important earlier, but still remains an issue that we have to continue to work on. And many of them are involved in what we call standard setting, which is a soft way of law. It's not that the BS given, like, it's not a chartered institution, so it doesn't have a rule-based that it can promulgate. Rather, what it does, by collectively getting around the table on whether it's on banking supervision, what are the rules? So the Basel Committee on Banking Supervision does that. Is the Committee on Payments and Market Infrastructure, comes up with best guidance for critical market infrastructures. Is the Committee on the Global Financial System that looks at more macro financial issues, stability, what drives it, what are the issues, what are the constraints. Just a few months ago they came out with a report on like how to do macroprudential policies for housing. Why would you want to do it? How do you go through it? Right. Based on a collective exercise, they put together that. And there's also a Markets Committee that's more operational. The more recent innovation is actually a BS Innovation Hub. They, building on all the technological innovation that we have seen, the BS 5 years ago decided that it should be part and parcel of that innovation that's happening around the world, where central banks, and we can talk about it more, work together with the private sector to make innovation a productive vehicle. Right. So it's altogether, it's quite a large set of issues. because BS people also go to, besides the IMF meetings, to the FSB meetings, to the G20, so there's a lot to cover. And it's a small staff. It's altogether not more than 700, so many people. When I was there, I was wearing at least 3 or 4 different hats, depending on the day or the hour of the day. So.
And it's of course located in beautiful Basel, Switzerland.
Yes.
So is it right to understand that the BIS is like a mix between a think tank for central banks, but also a forum for them to come together, right? I mean, you mentioned the Basel standards. So the Basel III, for example, is what people are talking about a lot these days. So what is the role of the BIS, say, in bringing these Basel III standards on the road? They can't impose it, but they have to bring people together to agree on them. Is that right?
That's correct. So for the Basel Committee specifically, there's a secretariat, so think of 10, probably even more, 30 people altogether, that provides the background material for the meetings. Of course, you slice the topic depending on the issue of the day. So, of course, after the GFC, the global financial crisis, a lot of concern about capital issues. So then they come up with proposals, and then it gets discussed in the committee, where it's both a combination, of course, the analytical input, so you raise the game in that sense by being together, but of course you also have to make compromises, and these compromises are meaningful in the sense you have to negotiate where you want to end up. We had an output floor in the Basel arrangement where the capital couldn't fall below a certain level. That ended up being 72.5%. Don't ask me the scientific motivation of it, but the bargaining one is an easy one to think. Somebody wanted 70, somebody wanted 75. So it's that combination, but it has this soft law component to it, right? So it is binding because the countries then take that set of rules to their countries and they put it in their national legislations. Not word for word because it has to be adapted to the circumstances, but then it gets applied to almost all the banks. In principle, to all the international active banks, but in many countries to all the banks in their jurisdictions. So it has quite a binding power as a consequence.
And I mean, you said, if I remember right, about 60 countries are members of the BIS, right?
Yes,
so it is not like a universal international institution. It is limited to, I guess, the bigger countries, the more advanced economies. Is that right?
That used to be the case. So if you go back 30 years ago, Andrew Crocker was the head of the BIS at that time, and a well-known name who really reinvigorated the institution by expanding the membership. Because prior to that, it was largely, think of it as the G10. So Europe, continental Europe, UK, of course. Japan was there fairly early on. US came a little later. And that was until he came on board. But then there was a big push to include the emerging markets. So by now it's G20, everybody is in there, but it's more than that. So the last 3 members that were added only a few years ago were Vietnam, Kuwait and Morocco. So the geographical diversity is there. Africa is probably the least represented, but in Latin America it's quite good, in Asia as well. Overall, I think they cover, the 30 most important ones cover already 80% of GDP. So by the 63 countries, we're close to 90% of GDP. So there's a limit of how large we want to be and can be. And one is the physical constraint of having a conference room that fits everybody. But it's also, you want the meetings to be productive, right? And the size can become a constraint. So we have done it deliberate. They may still expand further in the future. I don't know what will happen, but for the moment, it's that number.
Well, maybe let's talk a little bit about like content, what you've been dealing with and working on. One of the aspects you mentioned is financial stability, right? When there were spring meetings a year ago, everybody was talking about the banking crisis in California and the regional banks in the US. Of course, the Credit Suisse Bank in Switzerland was also affected, close to where you were living at the time. How do you see things now? I mean, stock markets, assets in general are very richly valued, yet there are lots of risks out there. Interest rates are going up. Are you concerned right now about financial stability? What's your view?
Yeah, I don't know. My mom is by profession always concerned. So and you have this, and I have the same background. So we're not going to be able to get away from that. And the GFSR, which came out 2 days ago here, of course covered a lot of those risks. So that I would focus on a few then that I think are still pertinent, because what we saw last year was in the US a run on banks that we hadn't seen for a long time in the US itself, and failures that historically, all the three combined, the Silicon Valley Bank and the First Republic and Signature Bank, amounted to close to the largest one. And I think the risks that triggered that was a combination of the valuation losses that they had, we know that very well, and the funding structures. Now if we go to the current US banking system, there's still a significant tail in the distribution that is in that same bucket, so to speak, where the losses are large and the funding structures are risky potentially. Now, banking is about confidence, right? So if we have the confidence, and that was restored after the crisis in March, but confidence can be disappearing quickly, we could see some things disappearing. I'm following up on some work that I did before on the land of last resort for the G30, and I'm doing now some work for another report, and that tail is still significant. So the US is not out of the woods, and we should be careful there. In the European context, the material risk that arose was, I think, an idiosyncratic one. The Credit Suisse was a bank that was not the best run. Corporate governance complaints, legal issues, risk management issues, and that eventually brought it down after a long slide in the prices. But there are quite a few banks that are price-wise not different from where Credit Suisse was at the beginning. So if you do price-to-book ratios, so that should be above 1 in the sense that the bank should be earning more to make up for its shareholders' capital. You don't see that in many European banks, particularly the big ones. There are some, UBS today is in that category, but not all of them. And that to me suggests there's a fragility there. There's a little bit more of a longer gestation. Your business model is not giving you the return that you want, and the risks are still nevertheless there. And Europe has risks from real estate, the global, they're more exposed than the US in some sense, the global economy, but also exposed to a very close risk in Russia and the like. So that makes for a combination that creates fragility along the lines of a Credit Suisse. Combine that with still a weak regulatory system for dealing with big failed banks. I don't think we have everything sorted out. If you go down further down the laundry list, one can go far down, but I would single out non-banks. Non-banks have grown a lot. The GFSR focused on the private credit component, which has some issues.
You're referring to the Global Financial Stability Report of the IMF, right?
Yes, for you and I. And that part is a concern to me as well. But I would broaden it even more that the non-bank part of the financial system has not had the financial stability perspective built into the policy framework. So we approach it typically consumer protection, investor protection, transparency. It's a more of a micro, bottom-up based approach, but that doesn't give you the stability at the aggregate level. And that has been 2 or 3 times in the last decade or so. It hit us. We had it in March 2020 when the COVID came. There was a market dysfunction. We had it a little bit with the invasion of Russia. We had it at other times. And unless we get it under control, we may have to get the central bankers again to step in, which is not where we want to be one more time. I think whether we will have it, I don't know, but let's work hard on it.
Yeah, and of course the potential for further shocks has increased, right? I mean, now we're having a crisis potentially in the Middle East, and who knows what this does to oil prices and the like, so it's an uncertain environment. But maybe one question on that regards emerging markets. When you talk to people here at the IMF, they're a little bit concerned that a strong dollar, high interest rates, and possibly a little bit of fiscal profligacy here and there in emerging markets could kind of put pressure on that group of countries again, although they went actually through COVID quite well. You share these concerns?
I think emerging markets have done relatively well, right? So during COVID, they were able to do more than we thought they could, and then post-COVID, they were quicker to respond on the inflation side. So stability, the typical pattern of capital outflows and currency depreciations, there are always exceptions and we know them, but on the whole have not transpired.
Okay.
So we're a little bit more optimistic, except for the one thing is that the bank sovereign links, which we know very well from Europe. If banks buy too much of the sovereign debts, you get these doom loops. I think there are some cases in which that concern is there. I'm not talking about countries in Africa. I think they have their own debt challenges, issues, but they're not insignificant either. So, on the whole, doing well, but never say out of the woods.
Fingers crossed. Yeah. I mean, you mentioned also among the work streams of the BIS something that many people would say, oh, here comes the boring stuff. But it's really important because we're talking about payments and settlements, right? And that used to be something that really was in the kind of inner works of the banking system. But now we're talking about new vehicles for digital payments, cryptocurrencies, stable coins and the like. And I remember myself vividly sitting in a G7 meeting in Paris a long time ago when Facebook had come out with this idea of creating its own currency, Libra. And of course that triggered a very strong reaction. So how would you describe the BIS's position? You talked about the innovation hub. I'm sure there's a whole new world that's opening up for banking supervisors and specialists in the payment industry. How does one try to maximize the utility, if you want, and the benefits of these new technologies without jeopardizing the stability and the security of transactions?
Yeah, I think that's been a recurrent, and actually was when I arrived at the BIS, that was the exciting area, because I was both on the Basel committee, but that was more in the negotiating phases, end of the negotiation. And the exciting thing was on the payment side, lots of innovation. I think on the whole, it's enhancing both for access, cost, efficiency, more generally these new, faster payment systems. But there is always this concern that you have a systemic risk that can come along with it. But there I think on the basic parts we know what to do. There's something called the principles for financial market infrastructures, how to regulate them. And when they're applied, which on the whole they are, take care of that. I think it's more the exotic parts of it that are more difficult to grapple with, and that would be then cryptocurrency is in that category, and DeFi, which is decentralized finance, is closely associated with that. And there, I think we should not necessarily look at this as something bad always. I mean, I think there are a lot of good developments. The technology is interesting. Blockchain has been very productive in terms of opening up new ways of settlement. And I think what the BIS Innovation Hub that you mentioned that was established recently is trying to do is pick the good parts of it. What are responsible, productive forms of innovation, and can we, as central banks, help foster those to be applied by the private sector in combination with the public sector. And one way to think of that is that we make a platform where we provide, let's say, a wholesale CBDC, a central bank digital currency, that can then become the backbone of a broader settlement system that is more efficient than what we have today. And one shouldn't ignore its plumbing, but plumbing creates a lot of cost nevertheless. So for you to send money across the ocean is taking some money. It's gotten a lot less these days. But for you to sell in the security market as well. So we can make the system more robust, but it takes a lot of work. So the Innovation Hub has been doing prototypes. They will probably at some point take it to the really operational level, probably on the payment side, on the cross-border. There's a lot of work in Asia that looks like it's going to take fruition. And maybe there are other areas as well where it can become like that.
I mean, one question that came to my mind in that regard, and that may be totally premature, but artificial intelligence is also one of these new technologies that may impact things quite a bit, no? I mean, has there already been kind of some thought given in Basel about how to think about it in terms of the topics that are relevant, and has there been some concrete pilot programs already, or is this too early?
We have not seen it. It may well have started since I left because it is rapidly increasing. So I'm sure it's on the radar screen, if not already on the books to do something about it. But there are many dimensions to it, right? So, so it has an economic impact, labor. There's the real side. There's a financial side. So one has to also be strategic where it is, and do you want to think of it as how can I improve myself, or how can I prevent risks? The two are not necessarily the same. So I think it will be an ongoing agenda for the Basel-based people for sure.
I mean, it could also be a supervisory tool, right? I mean,
Definitely,
it's good at picking out certain specific transactions, for example, if you look for suspicious kind of characteristica, for example, or other
stuff. Money laundering is, I'm sure it's already being used, so that it's an obvious application. But more generally, I think it's the unknowns where we always have to worry about most. So when AI starts to interact, it's a little bit like we have high-frequency trading, which maybe in principle makes a more efficient market, and they use somewhat similar approaches, right? A lot of data, a lot of algorithm, but then you do get these unexpected spikes, and then as a consequence, because the market is interacting in funny ways. I think AI has a little bit of that, maybe at a bigger scale, if you're not careful. And the other thing is, of course, it's a market structure question more, but AI is going to be very expensive, and some players will dominate the market, and that may affect as well. We had a big debate on big tech in finance already. So far, big tech has not been formally into finance in a large scale. It's been minor here and there, maybe in China the biggest. But if you think of AI, at some point somebody will say, well, I'm going to apply to finance as in providing services, and it will be easy to dominate the market.
Wow, interesting stuff. Talking about cryptocurrencies and the like, I mean, another angle that's more like in the popular discussion is central bank digital currencies. You already talked about the wholesale CBDC, but there are obviously different attitudes regarding CBDCs. I mean, in the euro area, for example, the ECB seems to be quite committed at least to study it and push forward and maybe get to a point where a political decision has to be made. China has introduced already a pilot currency. The US is like, maybe they're much more slower. Is the BIS trying to, again, bring countries to a certain standard, or is it basically there to help countries think it through? Or how do you characterize the BIS's role in that debate?
I think more the latter, to think it through. I think it's going to be an individual country decision. Because CBDCs, on the retail side at least, have a lot more non-financial components to it. Let's call them the privacy part of it. How do you want to design that? You also have to worry about the disintermediation, because you're going to be able to compete with deposits, which is a question about what do you want the private sector to do versus the official sector, which philosophically you can have different points of view about it. In terms of the perspective, things have changed. You mentioned Libra, and that was a wake-up call for sure, and we had many debates after that, because until before Libra the question was, well, let's not go there if we don't need to, because the private sector can do a lot what the CBDC stands for already. Then when Libra came along, there was clearly a wake-up call to the point saying, well, we need to actively develop a CBDC. At this point, after all the studies, including the ECB, I see a little bit of a pendulum swing slightly back to the middle and saying, well, we need to have established a use case. And the use case, and I'm always used the example of you and I, if there were to be a CBDC, would I have it on my phone in addition to my bank account? Or would I just say, well, why do I bother with a CBDC versus a bank account? And this sounds like a fundamental issue. Hasn't been really resolved, right? If you make a CBDC too successful that you're going to get rid of your bank account, you may not do a service to society because you wouldn't have banks anymore. And you would have everything in the central bank. But if you cap it too small, you may not bother with it. So these are just simple illustrations of that. We still have to rethink the use case, and that's where countries also may end up differently. So for some, it's the use case, it's about financial inclusion. The private sector is not providing savings accounts, payment services. I'm going to do a CBDC. Or is the use case, which you can argue more philosophical, I want as a central bank to be represented in the payment sphere. Because otherwise every money is private money. Now we carry sometimes still a euro or a dollar sign in our wallet. We want a signature sign on our phone. This is Fed money or this is ECB money, without otherwise thinking, oh, this is Bank A versus Bank B. So that question is not resolved. I think the study will go on. The countries that have launched so far have not seen a huge pickup. So China has been moderate.
Yes.
There's a few other ones. There's a sand dollar. And there are now logistical hiccups. It takes a while to get things going because you and I have to accept, but also the payment provider has to accept the CBDC. I suspect it will take some time still, and we may well see some countries saying in the end, no.
Yeah, it's not worth it, yeah.
The Riksbank is a good example, was a leader, really has stepped back significantly, may not go there in the end. Let's see what they decide. And it's not for, Sweden is very transparent, it's not the privacy part of it, I don't think so. It's just, what's the point when we have a good banking system? Yeah. Now we have to regulate the banking system well, of course, to make sure it does all what we want, but if that's in place, it may well be sufficient.
Yeah. I mean, it makes sense that for some countries where the infrastructure is not as strong, maybe more of a tool, at least for some years until the private sector catches up, and for others maybe it's just too much work. Yeah.
Yes.
Interesting.
Yes. Yes.
Maybe one last question, if you allow me, Stijn. We're talking so much also here at the meetings about fragmentation and the difficulty of getting to agreement on some key things. For example, the IMF only issued a chair statement again today rather than a communique because of all sorts of, I guess, disagreements on geopolitical issues and how to describe it and so forth. But one doesn't hear much about the BIS in terms of like these political conflicts. Is it because it's something that's really staffed by experts, or is it the technical nature of the work, or why do you think that the BIS seems to function quite well and these geopolitical aspects don't really come in? I mean, you mentioned Russia, of course, but that's more a membership issue. But once you're there, it seems to be a very smooth functioning organization. Is that right?
Yeah, I think it's largely because the discussions remain technical. So as I mentioned, we don't have operational responsibility. There's no equivalent to the IMF Article 4 surveillance exercise that we have to do. So the discussion happened, people exchange information, and people participate on the whole quite openly. You would always hope for more. The discussions are confidential, but even still that prevents people from speaking fully their open mind. So on the whole, I think it works quite well. New members need some introduction to feel comfortable and etc. So I think in that sense we're lucky. And in some sense it's something to preserve too, right? So we stay a little bit under the radar. We maybe not do less publicity than other institutions do, but that has a reward to it that we have these meetings which we don't advertise. People know about them, but we don't go out. And they're quite productive, and it's both the bilateral part of it, of course, as well, where there's a lot of exchange in a more closed setting that is very productive.
Yeah, excellent. Well, Stijn, thank you very much. I know you're now teaching at the Yale School of Management, if I'm right.
Yes.
I think your students will enjoy your lectures. I learned a lot today. So thanks again for coming today. And to our viewers, there's more to come still. We're not quite done yet. But for now, thank you very much for watching, and please go to our website at the Atlantic Council to see the previous contributions and discussions online. Thank you.